Hello and welcome to the look ahead for Thursday, the 30th of January with me, Fiona Cincotta, Senior Market Analyst at City Index. So looking ahead to tomorrow, main focus will be on the ECB interest rate decision. We also have Eurozone Q4 GDP data and consumer confidence figures, but obviously they will be playing second fiddle to the ECB. In the US session, we have US Q4 GDP as well as jobless claims. They will obviously come after tonight's Federal Reserve interest rate decision, which hasn't been announced yet. And then we've also got earnings tomorrow from Apple after the close. Also, big names such as Visa and MasterCard, as well as many others, will be updating us with their latest corporate earning figures. So starting off with the ECB. So the ECB is expected to cut interest rates by 25 basis points. This is going to mark the fourth straight interest rate cut from the central bank, taking the level to 2.75%. Now, the problem in the ECB that in the Eurozone, the ECB are facing is more of a growth issue than necessarily an inflation problem. They've managed to get inflation back down towards the 2% level. It has just ticked up slightly higher to 2.4%, but still nothing that they're too concerned about. Across Davos, we had ECB policymakers, talking about the fact that they will be signaling that they'll be cutting interest rates again in this meeting, and also potentially signaling to more interest rate cuts to come across the year. As I said, it's a growth issue. We've seen PMI data from the region is really quite weak. We've got manufacturing, particularly in France and Germany, where they've also got political uncertainty, but we've also got the manufacturing sector in Germany is in deep contraction. Service sector in the Eurozone is also looking a little bit weak, although it's sort of hovering just around that 51 level above expansion. But overall, we've had the business activity in the region sort of in and out of contraction. So even the hawks actually in the ECB are starting to sound quite dovish. They're expected to cut rates by 25 basis points, as I said. And across 2025, we're expecting about across 2025, we'll be expecting we'll be expecting interest rates to be cut by around 100 basis points. So that's going to be in quite a contrast, in fact, to what we're expecting from the Federal Reserve, for example. Obviously, the meeting hasn't taken place yet, but the Fed are expected to keep rates on hold and slow the pace of rate cuts in 2025 after cutting rates by 100 basis points in 2024. So that could mean that the euro is under a little bit of pressure. It's interesting if we just take a look at what's happening in the euro US dollar. Obviously, we've had this trending lower up to the low for 2025. It was a multi-year low of 101.77, has recovered trend. We had been trading in this rising channel, and obviously this now sort of we'll be looking to see what happens here. We've got, if you just have a look at my chart above my cursor there to this candlestick that's just there. This is an evening star reversal. It's a bearish reversal candlestick pattern. And so, that we could be expecting to see a continuation of the fall lower. Although if we have a look at what's happening here, this is on the 50 SMA now. It's just hovering about that 104 level. We've got a slightly longer lower wick there, which suggests there isn't much selling demand at the lower level. But we'll just need to wait and see what happens with the Fed, because that's also the lower band of that rising channel. So if we did see a fall below that, that would open the door to this level here, which is 103.45. Now that is the falling trend line dating back to October last year. It's also the low that we've seen in November. The other thing to keep in mind here is obviously we've got the ECB, but there are also these concerns over what's happening as far as the trade tariffs are concerned from Trump. It would appear that so far Europe hasn't been as much in the firing line as might have been initially feared, and that's what sort of prompted this rally in the euro from that low. But it remains to be seen. So if Trump did apply trade tariffs to the European Union, that could see growth, which is already stalling and weak, come under further pressure, adding more pressure to euro US dollar. So that's sort of what to be watching out for. Just let's have a look at what this all means for the DAX, because the DAX is actually trading at fresh record highs today. So if we can have a see, it's broken out of this rising channel. There's a couple of things going on here. Obviously, we've had the expectations that the ECB will be cutting interest rates and continue cutting rates, which has helped move the DAX higher. We've also had this fallout from the DeepSeek, but it hasn't really affected the DAX that much. This is the candle that was that DeepSeek AI news was related to, and it's actually recovered back above that rising the upper band of the rising channel, but we are very much overbought here. So, just be wary that we could see some consolidation or a slip lower before further gains. On the upside, buyers going to be looking for that 22,000. Downside, the picture is it is pretty bullish, I would say, unless we break below the 20,500. That would negate the near-term uptrend. We need to break below the 20,000 and sort of 19,700 in order to create a serious lower low there. So that's what we've got going on. As I said, we've got GDP data as well as consumer confidence figures as well. And then over in the US, let's take a look at Apple. Obviously, this what I'm showing you is prior to the Federal Reserve interest rate decision. Apple will be reporting after the close tomorrow. And I mean, it's going to be interesting because this is actually one of the stocks that's performed pretty well in light of the DeepSeek cheaper AI model, because what that would mean for Apple is that it would have potentially cheaper costs for cheaper AI spend, which has helped the share price rally higher. Now, share price is up, but it has fallen from its record highs that we saw at the end of last year. Expectations are for revenue of 124.3 billion. So that's up 3%, EPS of 2.35. But actually, it's worth noting that we have seen sort of, a slight weakening, as I said, from that all-time high sell-off here. We've had 2 broker downgrades for Apple ahead of its earnings, and that's basically on concerns over the iPhone giant missing its forecasts. iPhone sales are expected to be weaker, basically due to limited hardware upgrades, and the AI features that have been released haven't really seemed to gain traction so far. iPhone shipment globally is down 4% year on year. So these are all figures that just point to a miss as far as Apple is concerned. So as far as technical picture is concerned, it ran into the 50 SMA after recovering from the 20 SMA, ran into the 50 SMA, which is also this level here, which is the 23.6 fib retracement from the 2024 low to the all-time high. So we're finding a little bit of resistance around those levels. That was around the 237 and the 239. So if we get a break above those levels now, above the 240, then that could help power gains back up towards the 260 all-time high. However, if we fail really to see the Apple price push above here, got an immediate 100 SMA there down at 230. And then the next level of support could be down here at 223, which is the 38.2% fib retracement ahead of the 200 SMA. And then I'm just going to bring this up with the S&P 500. Again, this picture might change, obviously, as we've got the Fed rate decision today, this evening. But we've also got those jobless claims. There has been little bit of a weakening in jobless claims recently. So the market's going to be watching that to see if that's an early sign of some weakening in the US labor market, expected to come in at 220,000, just down slightly from 223,000. Q4 GDP expected to come in at 2.8% annualized, just down slightly from 3.1. But if we get a stronger than expected reading there, that could raise questions over the Fed's ability to cut rate, which may actually keep pressure on or put pressure on equity demand. So that could be a case of good news is bad news for stocks. As I said, we've also got earnings overnight. We've got Meta, Tesla, Microsoft. So those could all also have an impact on the movements that we see on the S&P. If we do get sort of stronger and encouraging data, and especially I think the market's going to be very focused on what they say with regards to DeepSeek in those earning calls, so, and sort of AI spend. So lots to be watching out for. As far as levels are concerned, we've seen that long lower wick there suggests really there wasn't much selling demand at those lower levels, back above the 50 SMA. On the upside, buyers are going to be looking for the 61,000 and fresh all-time highs. Support 50 SMA, pretty key there around the 6,000 level. It would take a move below here, the 59.15 level, to create a lower low, and then we've got that resistance zone here that comes into play around the 58.50 level. So that is everything that I am watching at the moment. I hope that enjoyed what we've been watching, and if you do have any questions, then please do contact me. Otherwise, I will see you tomorrow.